Hi, so welcome to this accounting worksheet. This worksheet, as we are here in this worksheet page, this is called Cashbook. So this Cashbook records all the transactions for a month. For example, we have here January 2018, and then we have on the left account description as wages and salaries. And also this account description, account name, wages and salary, it corresponds to account number, income statement 370. IS stands for 370. So in the month of January 18, for example, it says that the total wages and salaries is 12,099, telephone and internet 670, and traveling expenses for accommodation, traveling and accommodation expenses for January 2008, and so forth up to the month of December. And also at the end of December, it also adds all the totals for add all the monthly totals from January to December, so that the totals are here. And also you can have the total of each account, like business license, for example, sales and other income, as well as purchases and freight and charges. So while we have the total for each month for all these transactions, we do have a monthly total for all the performance of all accounts in a month. So this worksheet, this spreadsheet or Cashbook, is actually a summary of all the transactions that have been conducted on a monthly basis. So as you can see here, they are quite organized, and then while they are organized and while they are adding up all your totals and give you the trend of each month, there is another sheet I want to show, which is the reconciliation. So if, for example, now for the month of December, so we have month of December, this is the transactions and this is the opening balance of your Cashbook, and also this is the closing balance. So it actually says that, okay, opening balance is plus your spending for the month, which is the December, and then it will give you the closing balance here. And so if this is the closing balance, it means that your money in the bank account is also same as the closing balance. So this is how it works. The second one is just a loan transaction. So we're going to explain these transactions later. So what I want us to get here is that this Cashbook can also explain the trend of your bank account if the transactions are entered correctly and accurately. So if we go to this is the bank reconciliation worksheet. So B2, it refers to the bank account. So this is the bank account, for example, this one. So if we have the bank account B2, if we enter the bank reconciliation detail for B2, and if the transactions agree, it means that it has to be confirmed okay here. If not, it will be an error. So the question now is, now we have a friendly spreadsheet that gives us all this information and the summaries, as well as the details that you want to use it for reporting. So if we look at this total here, sorry, I have to emphasize this again. This is the same as if we take this total and treat this total as the trial balance. So if this is the trial balance, then you can able to proceed and prepare your adjusted trial balance for a annual reporting. So this spreadsheet shows that if you enter things properly according to their codes, they will actually fall in place into this balances as well as the summaries. So how do these balances, they are actually featured in this account, for example, 305, IS 305 purchases, and they all fall into the month of March or the month of April, etc. So actually, this is where we do the setup here. So this worksheet, it starts from a setup. So if we go to setup here, this is the setup. So you can key in to setup is to key in details. So if we key in details, for example, if we look at the colors here, this worksheet, as in other worksheet that I explained, you need to only do adjustments to the cells that are colored or highlighted yellow, colored yellow, or filled yellow. And the ones with blues, they are not allowed because they are programmable cells. So it's advisable not to touch these cells. Like for example, these ones, they are programmable. They are there and reference to the entire worksheet and as well as the data. So we can only change what in here. So for example, if we change Pacific to Pacific, just put the A. If we change here, we also know that this A's will also change, the A's here. So it depends on what you feed in here, it will actually appear here. So if we go again and adjust these triple A's, we will also find that your adjustments are made here. So this is what we mean by what we actually do in this yellow stuff here. They are going to be affecting other cells as we input our data. So we can input a company name or a business name. We can put a tax, sales tax percentage of your jurisdiction. In some countries they are 15, some are 5, some are 0. You can put 0, you can put 10, you can put 5, depending on the jurisdiction. So here, some companies or some small companies, they actually have two or more than 2 accounts. Probably 1 operating account, 2 loan accounts, or 1 loan account, 2 operating accounts. And most companies, they have petty cash. So we also feature here for the petty cash. So what it means that if we put in, okay, code means bank 1, B means bank 1. So if we say bank 1, bank 2, bank 3, and petty cash here, that your system in these sheets here will activate to take the details here that there will be a petty cash coming through, for example. So if we enter these details, or assuming that you are just a small company that you just need 1 account, you can delete all these 2 and then only put here. But then if you have, in the future, you probably take a loan, you can add here. For example, you can add here. So I'm actually pressing delete. So yeah, you can press delete here. But for the sake of this exercise or tutorial, we need to put in there just so that we flow with the data that are actually very important. Now, if you set up done, then that's it. You are free to start loading your data. So how to load your data is, there are many ways of start loading in your data. So for example, one of the first transactions that will appear would be the balance of your bank account or the money that you have in your account. So it depends where this money coming from, but that is the starting point. So when you use this worksheet for the first time, you need to actually, the first line should be the balances that you have. With petty cash, for example, if you have, or with loan if you have, or if you move a current financial statement because you have been writing in manually, or you have been, for example, using it, writing in a manual ledger book, so you want to move everything in. So you can also start with input a account balance here and start off with the details. So here we are trying to put in details that will run from 31, that will actually run from number 1 January 2018 and onwards as the beginning of your year transaction. However, when we enter our balances, these cash balances, we probably want to put number 1 January 2018, or which year that you want to start your business to use this Cashbook. Or you probably want to backdate it a bit, but in whatever circumstance, the result will be same. There is no difference in that. So in this worksheet, let me explain this worksheet now. In this worksheet, you have this title here. This title, you should not change it. If you look at the codes here, it makes reference to the setup page. Setup page is here. You can't do anything about it. However, in this worksheet, you can able to change anything within this yellow space here. Anything under this yellow, as I scroll down, for example, if I scroll down, you will notice that. So anything within this yellow area you can change. If anything that is under the blue section, it is like this blue section here, you are not allowed. They are all programmable. So if we look at these things, it's also programmable. So they are not allowed to be touched. Even if you made an error, for example, if you actually press 0, it will give an error. So you will always be notified on doing it again. So or you press cancel. So these are the things in this data sheet. So once you input your once you know your bank account balance, then you insert the balance here. Then you probably put in the description opening account or opening of a balance account. Then make reference, or this is a balance sheet item, or this is a bank statement item. Then name your bank here, ABC Bank, whatever bank you want, put it there. So to start off with this, we have to detail this one as the withdrawal. It will be put in as a withdrawal. Let me check just to confirm. Sorry, it has to be detailed as a deposit. So deposit will indicate that this money is actually a debit account, which is in your account, it is debit, or it is not a loan. It is actually an account that you hold money with. So if it's a loan, 65, if 65 is a loan, or is money that you owe to somebody, so the bank account is overdraft, you can put a W here to represent that it is a overdraft or it is a credit account. So if it is a credit account or if it's an overdraft, you put W here. W represents withdrawal. So if you put here, the amount will actually stay here, but it will automatically change to negative because it is an overdraft. Overdraft is a negative. If it is, however, a positive amount, or it is a debit, not overdraft, you put D. D stands for deposit. That means there are money inside the bank account. So this figure here will not be negative, but it will be positive. So these are the circumstances that will allow you to start entering your transaction. So we'll go back to change here. This is actually an overdraft. This is a sample of a company that I did. So the balance here is overdraft. So you can put here W for withdrawal. And also, if you have petty cash, it's time to put in petty cash. So you can put in petty cash by any means. Assuming that there are no transactions here, you can put petty cash here. But if you probably need to input it now, you probably forgot to put it initially, you can always insert insert a sheet here. If you insert a sheet, you will see that things are not there is nothing here. But you can always take this one and copy it to this space. Once you copy it to this space, you will also take copy this one to this space. Hit enter here. Hit copy here. So assuming that you have petty cash, so write that petty cash here. So we wanted to put in petty cash. Okay, petty cash is a bank, and also it's $500. So some organizations can have petty cash 2,000, some are 300, some are, it depends. So this is the opening balance. Okay, we can put here as an asset. This one is also an asset. It's also an expense. So here under the bank code, we can change it to petty cash. So we have petty cash here. Remember, these ones here are actually coming from this one here. Sorry, this one's here. So this is it. And then we under the account name, we can choose the account name here. So the account name, you can find it over here. BS 399. So we can find BS somewhere around here. This is the one here. So we actually inputted a petty cash that's 500. Remember, I've explained that 65 here is an overdraft. Here the petty cash is not an overdraft, it's actually cash. So we got to change it to deposit. So once we change it, the amount changes to positive. So what is important here is that we just need to know what actually happened at the beginning of entering your opening balances. So once you finish with entering of your opening balances, then we can able to start inputting the transactions. So the transaction could be, for example, the first transaction could be stationery from Vinod Patel, and the reference receipt number is 616902. And so with stationery, the amount is 450, and this is tax code here for purposes. We have to enter it as an expense. That's why it's appears as E. And then we're going to take this money out from bank statement, bank account number 1, B1. And also we have to start allocating the account description. So here, IS, which means income statement 390, is actually for office supplies. So stationery is actually office supplies. So this account will correlate this one. What is important between this one and this one is that when it comes to the summary in the cash book, if we look at stationery, if we go to stationery, what's the account here? 390. Stationery, 390 stationery. So this is 390 stationery, which is grouped as office supplies. So office supplies. So if we go to our transaction here, this is saying to us that 450 is actually paid out from bank account 1 and is allocated to 390. So 390 is actually the office supplies. But then if you look at this description we entered, then we go to Cashbook. Under here, 390, it's not appear in January. So we can go back to data and see, we know that, okay, this one is entered as 31 December 2017. It will not appear. So if we, however, change these transactions to year 18, and then we want it to be number 1, change 12 is actually December. Then it will affect the number E. It's actually appear here. First, it was not. So it depends. If you put the dates wrong, it will not appear. It will data again. So if I go to here and change to June, so assuming that June, so when we go to this data, this data is actually telling us that in the month of June, these two have allocated this one to the month of June. So if we go to June, for example, this one is now here. So what is important in your data is if you accurately feed in the correct information, this will actually balance the summary, as well as it will appear on the respective month that you apply. So for your decision making purposes, you have to ensure that whatever is entered here in your transactions, it's summarized in the month. So here, this is an example. So we can always go back and change this one. So if we change this 450 here, this 450, go back to, say it's part of January. So I actually aggregate everything to January. You can put the dates if you like, the dates of each transaction. And I'm making it here to be just easy for us to do the transaction input. So instead of putting the dates, you can put in the dates for summary of the month. So it depends. If you want to enter each individual date, it's time consuming. But if you have an account officer there, okay, that's okay. But if you are just on your own as an entrepreneur, I think you need to go by the shortcut. That's just entering these dates here. Otherwise, you should stick to the dates on the receipts. So here, for example, Kundan Shai, this company paid Kundan Shai a rental expense for the month of 14,000. So if you look at this one, this is 17. So it's actually an error date. So if your receipt is say 7/2007, that's okay. But if it's January, you can change to January. So I'm actually making our life easy here. So the dates are also important. Any date that we put it here must not exceed that. Put W because you are actually withdrawing from the account. Excuse me. So you put W here and then put the total. Always put E because an expense it's gonna be withdrawn from the account, bank account 1, and also it's rental. You always go for rental like this. So and so forth. It will going down to your last transaction of the month, which is 31 salaries for the month. However, if you are using a bank statement, and bank statement, they can have bank charges and credit entries, and if you have credit entries that are related to income, you can create income for that. Always put D for the income, put the income deposit here, and also put the amount of all the income that appear in your bank statement, or plus any information you collected from your receipt, from your till. These are all entered here and filed in your lever arch file, and make reference to 188,572. So in your revenue or in your income filing, it has to at least have this amount here with corresponding receipts as well, or corresponding bank statement. So with this, you can be able to see that, okay, all the income for the month is here, but instead of W for withdrawal, it is now a deposit. So you can put all the deposits here, and then again, what bank will be transacting for the income, and as well go and search for whatever you put here, sales, or any other income that you wish to allocate this income to. So these are basically the core income of this business. So if you have loan interest, and loan interest is probably when you I'll explain this one later. Loan repayment. And bank charges means you have to go through all the bank charges in the month of January. then you add them together in your bank statement, then you put it here. But it is not a D for deposit, but it will be entered as a W for withdrawal. So all the charges together, then you can allocate it to bank charges. And so any other direct deposit or direct debits into the account, you can also make a summary of this. For example, if you have other details in the bank statement that allows you to do some purchases directly from your credit card as well as the Visa card, and they appeared in the account, you can take this direct bank account purchases or whatever spending that you do, you can also do the entries from here. And there is another point I want to make. The point I want to make is, say in the month of January, you acquired a loan. So the loan will be an opening balance. Same as we did before, you always, we will always put this loan here. And because it is an incoming fund for the company to start with, we put it as a withdrawal, and also to create a long-term liability for this one. So we awarded this transaction account to this new loan. So when there is a loan interest that is supposed to be repaid and so forth, remember it's picked out from B2. So B1, for example, is paying loan repayment for this account here, because this account will be repaid by the company bank account. So that's why we have 10,000 here as funds that are actually paid out from the bank account number 1. However, in terms of double entry, we have to create another reduction or reducing account, which is the B2, and also this is a deposit into this account. So this is basically what we want to explain in terms of this worksheet. So the take for this worksheet input is to ensure that when you finish, you recheck. If you are using a bank statement, recheck if all the transactions are inputted or have been correspondent accounts and references are made here. So if you're using a checkbook, for example, you have to list all the check numbers here. So check numbers, respective amounts, and what actually going out, what for, then you do the allocation here to the accounts. So if this is done, then you can able to go to your reconciliation. So in terms of reconciliation, for example, if we go to B1 in January here, if you click B1 January, see the error is actually, there is an error here. The error is actually as a result of a change. So because it's a change here, the error, because there is a amount that needs to be inputted. So if you input the actual the actual amount that is in the bank statement here, it will give you the okay here as previously noted. So when it's okay, it means the bank reconciliation is actually reconciled. So this yellow space here is for the end balance of the bank statement. Remember, we are dealing with your bank statement on a monthly basis. So the last balance that normally comes in 31 of each month, 30 of each month, the last balance in your cash book. Sorry, in your bank statement, this is where you're going to enter. And if you enter everything perfectly into here, all the transactions in the bank statement that appear, you also put it here, then your reconciliation will actually give you an okay. So when there is an error, ensure to look for that error where it's actually incurring. So as an accountant, you can always do the reconciliation. You can always check your bank statement if all the transactions are entered with not mismatch or transposition of figures. So once these figures are accurate, your bank reconciliation will give you an okay. So if we continue to do this recording, it will give us this sort of data here. So it will automatically give us the summary of Cashbook summary for January, February, and so forth. So when you reach by the end of December, it will give you the total. So as I said earlier, this total can be treated as a trial balance. So you can copy this for the use of trial balance, assuming that at the end of your 31st December of each month, they are all the bank reconciliation is balanced. So if this is balanced, then you can use it for your cash flow purposes. So before you use this one as a cash flow, remember there are other transactions that are sitting outside of your entries. So things like other liabilities and assets, and other small business assets and liabilities that you define it to be liabilities and assets. So we can call the totals that's coming out from the sheets they are actually an adjusted trial balance. So you can use this as part of your adjusted trial balance. So depending very much on the purchases, the entries that you did, it's actually giving you the picture that you really want for the end. So end of the year. So if you look at the dates here, when this months here, these months, they have balances here. So as I said, this balance is equal to the closing balance, and these are all reference to your bank statement balance. So if you go to the trial balance, to your bank statement for the month of July, they will always match and equal. And once they are equal, you insert this figure into here for the month of July. It will give you the okay balance. So this is actually the type of information that we'll get out from this. The last 4 accounts here, it gives us the flow of your petty cash. So if you have a petty cash, it will give you the reduction of each month, as well as the total that you spend depending on the petty cash that you use, and also other accounts, the trend. You see, you started off with loan, and then with the explanation that I did for January, it will give us the constant reduction of the account 69, 60, 52. So that's how it's going to happen. So the thing about this worksheet is to understand the January, as I've explained. Keep understanding the month of January, and once that's set, you're going to be okay throughout. However, if you have doubts or questions, always go to the instruction sheet. This is the instruction sheet provided by, I'm a subscriber to this consultancy firm. So always go and look for anything to do with assistance that you need from this worksheet. If something that is not explained, which I'm doing it on the surface of the worksheet, so you can be able to access it, and then you use the instruction tab to seek for any solution or to fix your problem if you have issues with this. So this is basically the trial balance discussion that I want to finish with this. My other point on this is you can also change these wordings here so that it affects these parts here. So if we go, for example, IS 390, IS income statement, it's office supplies, and it's also stationery. Then you probably in the future change your mind, like, okay, 390, yeah, this office supply. You probably want to change it at stationaries. So if we go to data, go to here, you actually stationaries also change. Office supplies already changed. So you can always change anything from here, from this side. You can do it basically it. So when you copy, remember, when you copy this one for further work as part of your unadjusted trial balance, you just highlight everything here, copy, go to here, insert a new worksheet. Always put in this add values. Add values, then it will give you this one. So why I insert it just using the values, that it will not bring in the format from the original worksheet. So then from here I can able to copy your accounts. So this is your accounts here. So this is your accounts here. Go to here, sheet here. Then copy only the values. So yeah. So to start off with, this is actually, we finish off with my explanation. So this is actually the unadjusted. You can name it unadjusted trial balance if you like, but these are the balances that actually that's allocated to this one from this annual data that we inserted into this worksheet. So from here, in my other presentation, I want us to start looking at this data, and then I will bring it another worksheet so that the other worksheet will help us walk through this information in the import trial balance, so that we can do adjustments. Remember, as I've said in the beginning, this tutorial is for the accountants who are really struggling in the workplace. So from here, you can able to insert into data that will be able to give us something like this. This is actually a IFRS for SMEs. So using this IFRS standard, in my other next presentation, we'll address trying to get this trial balance into another worksheet so that we can translate that worksheet into this information and produce an automated IFRS SME. Thank you so much.